Ranbaxy numbers are out, and the adjusted PAT, I believe, the reported PAT at least, is well and truly below or more. The loss is more than what we had estimated post the Forex loss. So 420 crores were our estimates. 580 is what they have done. Mind you, the adjusted PAT was seen at 370 crores. We'll wait for those numbers to come out, as well as the top line numbers to come out as well. Mind you, Ranbaxy has got 2 or 3 of these streams which kind of impact the bottom line quite significantly, and we've seen this quarter after quarter. It's important to decipher what's really gone wrong this time as well. But the reported Q2 loss is much more than what we were estimating. 580 crores versus our poll of 420 crores. So almost 160 crores more than what our estimates were. The margins, I think there would be an expansion. There would have been an expansion. We'll wait for the adjusted PAT numbers to come out of Darshan to just give us a sense of that.
Margins are actually expected to be coming in at 17.5%, almost doubling plus on the base of 8.8% in the same quarter last year. As Neeraj pointed out, the key highlight in the quarter was the impact that would come on PAT because of MTM losses, Forex adjustments, and that has been more significant than what the market had anticipated. Sales was expected to be up by 41%, so you're looking at a sales figure of 2,900 crores. Let's see what they've done on the sales front. Forex loss has come in at about 599 crores. The expectation was about 600 to 750 crores on Forex and MTM in this quarter. So a little, actually pretty much in line with what the estimates were running
the top line
in the market.
The top line is above estimates. We were estimating 2,900 crores. I believe they've done in close to 3,174. So the top line is well and truly above estimates. I do not know how the margin picture would be. 3% over purely by virtue of the fact that the reported number is higher. And mind you, I think that there could be a problem on the EBITDA front compared to what we were estimating, because our expectations of Forex were around 600 to 750 odd crores. They've come in at the lower end. So the Forex loss probably has not got as much to do with the widening of the reported loss as opposed to something else. So the Q2 loss of 586 crores, well and truly above the 420 odd crores estimates. Sonam, the first take, it's a difficult number or a difficult stock to call purely based off the reported numbers on a quarter-on-quarter basis, but sales above the reported PAT, well and truly below estimates, and the Forex dog continues to hound Ranbaxy.
See, the Indian pharma story and the P's, high P's are purely because there is predictability. If the predictability changes quarter on quarter, then obviously the valuations and the P should shrink. All the pharma stocks, including Ranbaxy, have had a decent run. So I would presume that Ranbaxy would face pressure from here on, because going forward, I think market will start to differentiate in visibility versus what is possible. So, purely going by the trend and the numbers, my suggestion is that.
Okay. Before we take that break, we might as well get in Sandeep Wagner's recommendations as well. But Sandeep, a word first on Ranbaxy, down 3% post the numbers, and then your stock recommendations.
Well, in the short term, I don't see strength. I mean, I would book out of it. We were bullish a couple of weeks back, but I would rather not be in this stock at this point in time, and the results are reflecting that. My recommendations would be a buy in Sessagoa, stop loss 186, target 196, a buy in Century, stop loss 31350, target 330, and a sell in SBI, stop loss 2040, target 1930.
It'll be important to see the segmental performance also for Ranbaxy. We were, of course, likely to see a boost in revenue purely on account of Lipitor's generic exclusivity and a favorable currency situation. The stock, however, is down 3%. Must also add, I mean, we're going to be looking at more numbers come in. The impact has been severe because the Forex loss has been higher than what we were expecting, within that range of 600 to 750. And also, there was the expectation of a higher EBITDA performance. So let's see what they've delivered on both those counts. So the Forex loss has come in at 850 crores. So we'll take a short break on that note. When we come back, address these numbers in a bit more detail.
Okay, back with closing trades. If I'm not wrong, Ranbaxy, the operating or the Forex loss, there is a below operating line Forex loss of close to 600. There's some other element of 250 odd crores, which is why it comes to 850 crores consolidated. So the Q2 Forex loss, for the record, consolidated Forex loss is 850 crores. And now you realize why the stock isn't falling so much, because it's not that the bottom line has been impacted by other factors which are operational. It's essentially got to do with the fact that the Forex loss is wider than what we were anticipating. I think Darshan is here with us. Darshan, is my reading correct? Or correct me if I'm wrong actually. 600 and 250 or 850 odd crores is the consolidated Forex loss.
See, that is right. We've been saying since morning, never go and trade on Ranbaxy, because if you see a loss number, and we had told that there will be a loss number coming in because of the Forex. Now, Forex is divided into two for Ranbaxy. First of all, is the MTM loss that they have, because of their derivative products. That came in at 600 crores. And the other is the Forex loss they have because of their loans. That came into 250 crores. So totally there's 850 crores. This has come in much ahead of what we had anticipated. We had said 600 to 850. But Ranbaxy always comes out with very skewed numbers as far as their Forex is concerned. Overall numbers are not good. They have come in a little below, because what is even you have to see Ranbaxy on an operational front. Operational front, when we were expecting margins of close to 17.5%, margins have come in at 16%. Sales have been good, but the operationally, in terms of the expenses, that has gone up. So operationally, numbers not good. They've come in little below expected. And after you adjust all the Forex loss, we were anticipating profits to come in close to almost 370 crores. Profits, if you do all the adjustments, have come in at close to 270 crores. So on the sales fronts, they've done well. They haven't been able to maintain the margins. Margins have come down for the company, and even profits have come down. Mainly on all the adjustments you've done, the numbers don't look good for Ranbaxy at this point of time.
Right, but how would, while I understand your point on the bottom line and the operational level performance, Darshan, just if we go by the top line number, that's a fairly significant outperformance to the estimates that were running in the market. I mean, 41%, and they've come in with roughly about 55% growth.
See, sales are there, but you need a breakup of what they've done as far as Lipitor is concerned, because that is a generic thing. It doesn't matter how much the sales is. You have to see what the operation is. The point is, on the operational front, they haven't been able to control their expenses. So if you do a calculation, I think in most cases, I'm telling you, sales are good, but you have to see how they've done it, and on an operational basis, that gives a comparison of a year-to-year comparison between what they've done, because that's the figure that people look at, the operational margins, and that actually has come in below, almost 1.5% below what was anticipated.
Fair call, Darshan. Thanks so much. Point taken. Thanks a lot for giving us that perspective.